Hey guys, I'm Richard Fitzgerald. This is Dubai Works, where we interview the business leaders making a difference in this great city.
That business with scalability was very interesting to me.
I like building something that has legacy.
Welcome back to another episode of Dubai Works Business Podcast. This week I'm really excited to be joined by a media tech success story out of Dubai, Philip Bahoshy, who's the founder and CEO of Magnitt. That Magnitt is a platform where venture capitalists and entrepreneurs can come together, connect, and gain insight. They're the first and leading venture data platform supporting investors and founders with research insights from across the emerging venture startup ecosystems across Middle East and North Africa, but also Turkey and Pakistan. So good morning, Philip.
Good morning. Thank you very much for having me.
And thanks for joining. So we haven't really sat down and had a conversation in a long time, but we both our company and yours started off in Astrolabs.
Absolutely.
In JLT, a really great environment for places to start. And I remember when you were starting, and it's amazing to see how prominent Magnitt has come.
Thank you.
Where did the idea come from?
Look, I mean, the journey's been quite a roller coaster. Originally, I had done my MBA at INSEAD, and long story short, I did all the entrepreneurial programs. And one of the things that we did was this startup bootcamp, which was a weekend where you start on a Friday and then you pitch to investors on a Sunday. And it was all intensive training on all the theory around what entrepreneurship and how to set it up was. And one of the things that I struggled with, an exercise they asked, which is to reach out to alumni to get feedback on the concept that you were building. While there was an internal platform looking to connect you to the alumni, what you realize is you're reaching out to people that may be interested in your idea. And I thought, well, why isn't there a platform that people who are already intricately interested in the concepts can reach out to the founder? So actually, true story of Magnitt 1.0 was it was a Tinder for startups, whereby it was a very simple card allowing founders to put up their ideas with basic information, and then people from the community would come, whether they were investors, co-founders, service providers, to connect. Pivot, a little bit of an evolution of time, and we're now very much focused on data analytics. While it was always the reason for starting the company, the hook was the kind of the swiping concept, we've really doubled down now on data research, access to information, which is what we've now grown into.
Amazing. Well, it seems as if from the outside, I wouldn't have known that there was many pivots. It does seem that it was from the start, Magnitt was very invested in the part of the startup ecosystem. But I guess a question is, where did the name come from, if you'd like?
So actually it came with speaking to a friend of mine. I was very dear, having spoken and learned a little bit about the marketing concepts. I needed a 2-syllable name. I mean, at the time it was very fashionable, the Tinders and Uber and et cetera, the like. And a friend of mine was doing marketing, and I kind of brainstormed with him some concepts. And the original names were all very investor, tech, platform pitch, etc. And he said, look, be creative, open your mind up. And the original idea was to connect people together. So he came up, and the other requirement, it had to have a .com domain. And so he said, well, have you heard of this Magnitt thing? And I was like, and I started socializing it with friends and family, and everyone was like, no, it's stupid, it's silly. And then the guy said, one of the pieces of recommendations that I always say, forget what everybody else thinks. You're the founder, you're going to sell the story, it's your name, it's your identity. Let it sit with you and see how it percolates, because you'll have a logo, you'll have a punchline, you'll have everything around that. And at the time I was like, I really like the name. Nobody else did, but I was like, I really like the concept connecting. It's spelt wrong, it's not Magnitt, it's a Magnitt. And so it's catchy and people will have controversy around it. And the more I kind of let it sink in, get a logo with it, get the .com. And it was funny, I used to do these email updates. And at the time I'm building a website. Then I just changed it to Magnitt is going to be doing this. And then people started liking it. And of course, when you launched, there were trolls. People didn't like it. Some people liked it. But with time, it just became synonymous to connection and, in the end, data gathering for the platform.
And we can see the logo for those watching, not listening. It looks like it's got the
two magnets.
Yeah. Oh,
yeah.
And
it's
the
two
bottom,
magnets connected together.
Connected. Okay.
Yeah.
Amazing. So, you know, without asking too many questions on the entrepreneur choices for a second, what was the journey like? Like, what did you do at the start, apart from the bootcamp sessions? What were you doing in terms of the product, the next MVP that you...
I still think I made all the mistakes that I was advised not to do, and I still did them. I had a niche market, non-monetized, sole founder, just a huge amount of determination and hustle to believe that this is something that was needed. Paid an outsourced development team. So literally, if you had a checklist of all the things you shouldn't do to have a startup, I hit all of them. But what I identified was this lack of information in the Middle East. I used to be at Oliver Wyman, management consultancy firm. And I remembered that while there was Bloomberg, Thomson Reuters and the likes, there was one portal that you could get, which was Zawiya here in the region, which was company information. And it was the only source of information. In the end, that gets acquired by Thomson Reuters because they come in and they realize that the region is very challenging. So the determination was, how can you capture this information, use it, and then make it useful for potential clients? And the reason I say I pivoted, originally it was an MBA platform. We pivoted to the Middle East. We went from a connection platform to an open source...
Sorry, M&A platform originally? No, MBA.
MBA. So it was meant to be connecting MBA entrepreneurs to MBA alumni. And everyone said, that's too niche, it's too difficult, it's too complicated, you can't do that.
So a Facebook for MBA grads?
Correct, exactly. So then we moved it to a Middle East platform, still connecting. Then we moved it to an open source directory, and really where we began to get traction. And I remember my Medhat, who was Aventus, who now has been acquired by a Silicon Valley based startup, was at Astrolabs. And she could see that I was really flustered and frustrated, and said, look, Philip, I don't think you realize you've got 2,000 startups on this platform. Nobody has this information.
True.
How about you create a chart or a graphic or a information piece around the data? And I was like, well, I don't know how, except I was a consultant. So I used Canva, and we produced a 2-page PDF based on the data we had on the platform, and then just pushed it out on social media. And all of a sudden, people began to take notice to this. And then 2 months later, we did the same thing, but the investment landscape for the UAE and MENA in 2017, I think was the first one that was published. That got traction. And then all of a sudden, the light bulb clicked that it's the data's important, but being able to use that, visualize, and do analytics on top of it was where there was value. And that's where we doubled down into data, analytics, research, directory, and etc. And so we've effectively moved in that direction ever since.
And what sort of numbers do you have now across the board? So how many startups are on the platform? How many employees do you have? Those type of things.
So we have 21,000 startups listed on the platform.
Wow, that's huge.
We now cover, as of this month, Middle East, Africa. So we're now covering Sub-Saharan Africa, Nigeria, Kenya, which we didn't do before, Pakistan and Turkey. And for us, the sweet spot is the emerging market landscape. There's over 6,500 investment transactions that have happened in the region that we track. All information on founders, investors, amounts of the transactions. There's over 1,500 plus investors that have made investments in those startups that you get the full profile of information. And we've now published over 150 research content pieces. And our team is still very lean with 20 people, but we're currently hiring 15. So if anybody's looking or interested in the startup analytical space, we're hiring aggressively now. And our goal is, once we've consolidated and captured that, to continue to expand into the emerging market geographies.
That's amazing. It really is, because you know as you described it, because you know what you set out to do is one of the most daunting things for a startup, which is a platform. And the platform needs, it sounds great in theory, but it needs things from both sides. It needs, you know, whatever the platform is, it needs buyers and sellers to come. And that's, that is the hardest thing to do. Not only do you need good tech, but you need good marketing. You need so many things to get right. And also, things that don't hit it straight away, eventually they fade away, yet you've persisted. Magnitt has, not only has it been ever present at the kind of pre-COVID conferences and everything like that, but in terms of the messaging and how you've presented this data, it has become a really kind of one of the most important data cogs in the investment ecosystem in the region.
Thank you. I appreciate that. And look, it took a while to work that out. And COVID, while obviously a horrific situation, may have been somewhat of a blessing in disguise for us, because we were running around in all directions trying to just get Magnitt out there. And when you have to focus on monetization, survival as a company, you very quickly work out, well, who's paying? What do they want? And really, in the last 12 months, we've refined the product so that it matches the demand of the clients. Interestingly, people, I don't think, realize that our clients are not necessarily the VCs, although we have many notable VCs paying for the platform as a subscription, but governments, corporates, big tech, service providers, all of whom we know that the ecosystem right now is hot. Not only Dubai, the UAE, MENA, but emerging markets. I can tell you the global ecosystem for venture capital investment grew 2.5x in the last 5 years. The emerging market space has grown 10x. Obviously coming from a much lower base than US and Europe, but it's growing exponentially. Governments are interested in this space. Corporates are interested in this space. Digitalization and digital transformation is very hot. But when they want to understand what's happening in that landscape, data is a key decision maker. And that's where we're trying to support those people. And going back to the product, it's not just about the news, it's the data that helps them. So our goal is to help inform decision makers using that information.
So the products, your customers, as well as people who, the things that the freemium model, you release some of the reports, the data, and then the product is a subscription model. Do people sign up and do they choose which reports they're interested in, or how does it work?
So basically there's two sides. So everything I'm talking about is building the SaaS product online. The freemium model is a little bit like a LinkedIn. You can go on a LinkedIn, create your profile. You can actually apply to over 100 investors using your profile as a startup. The investors can accept these applications on the platform. That's all free. Where you start paying for the benefits of the platform is the functionality. So LinkedIn Premium, it's the filters, it's the identification. The profiles don't have all of the information, it's limited, you can access the rest of the information. We have integrated charts of all of the data that's built on the platform that is manipulated. If you want to know how many female founders there are in the UAE that have received funding, how much they've raised, all of that charting information is available as part of a subscription, as well as exporting the data. So many of our clients, consultants, governments want exports of the raw data. That's part of the subscription. And every quarter we're committed now to publishing about 10 research quarterly reports on 5 leading geographies. So MENA, Pakistan, Turkey, Saudi Arabia, UAE, and Egypt for the time being, as well as the 5 industries broken down by those geographies for people that are really trying to understand the trends. Who are the hottest startups? Who are the investors? How much is coming from local capital versus international capital? And all of that is built on the platform. No Excel spreadsheets, which we used to do before. All of that's built on the proprietary platform itself.
Amazing. Right, so to break it down those two parts, so I have an investor deck, I'm looking for angel round, seed round. I can put it onto your platform, create my company profile, and other people anywhere in the region or outside the region can see that and can contact me.
Absolutely.
And can give me money.
Potentially.
Wonderful.
Or if Google's running an accelerator program and they're interested in all the media companies, they could filter through media companies that are, say, raised $1 million, located in this location, etc. Identify. You can even contact all of the founders either through the platform, or you can access their information on the platform.
So in one way, and forgive the reference, but that's a little bit like Crunchbase.
Correct.
So they have a platform where all the startups are there. It says which year they raised their money, and it kind of stops there.
Correct.
And you've taken it. You're not just doing one of those. You're also really doubling down on the data side and the research side.
Correct. Yeah.
How do you do the research?
So look, I mean, the research now is all integrated. We've invested in a Tableau platform for the time being, and actually the next step is to integrate it onto the platform. All of it is a massive data platform of line items of transactions. The research, based on the research team and the ideas that we have, tracks certain key indicators: evolution of investment, the industry breakdown of the different geographies or the geographical breakdown of the different industries, who are the most active investors by ticket size, who are the most invested startups by ticket size, how much is coming from, so it's all theoretical based. And we speak to our customers. What are the key questions that they are asking for? The real holy grail, which we'll look to try and crack next year, is valuations. I think an important point to try and understand is the Middle East lacks data. What we've tried to do is solve for that problem. The truth of the matter is, if you go to the US or Europe, the company house in the UK or Delaware or the SEC has the information. The international platforms actually pull this data through APIs. Here, there is no such platforms. And if they are, it's 18 countries and different geographies. What we're doing is consolidating it into a single platform, cleaning it up, either gathering the data from the individuals or the investors or public sources, and then making it available for potential clients. So really, it's the lack of data that is the first step. It's the research that we put on top, which is the second step of it.
Interesting. So the people who work for you, your team, are they researchers? Are they journalists? Are they economic students? And how do they go about their work?
It's really a mix. I mean, the research, actually what we're doubling down now is on data scientists, because the research side it's conversational. It's trying to understand the trends and etc. So we have one or two researchers that are pure researchers from that perspective. The trick is to get the data scientists, because the data science behind it allows us to do more manipulation of that information. Another plan for next year, a lot of our data is historical. Our goal is to start going into predictive. Once you can start going into predicting trends, for instance, e-commerce, the first mover advantage, the first industry to peak in all emerging markets. But once that's been consolidated, you're now seeing huge rounds, but less transactions. Fintech, huge number of transactions, but earlier stage. So the next wave. What we want to try and do is predict the next waves of activity that's happening in that space. And not to forget that we also have a newsletter. One of the key things that we've built is the newsletter. We're not a media platform in the purest form like yourselves and many others. We use the newsletter very much to keep people up to date, referencing third parties, using our own research, referencing specifically focus on investment news, but it's a great hook to get people engaged. And ultimately, if they see value in the newsletter, then they can become a client of the actual platform itself.
Definitely. It's one of my touch points with Magnitt. I read the newsletters when I catch up with the weekend, but I read them all.
And that's completely free.
Yeah, well, thank you. It's great service. But so just a little bit on, you touched on something quite exciting and interesting there, the valuations. So just in a general, so moving into kind of talking about the ecosystem, and I know you mentioned amazing stats about how it's growing in emerging markets, but so how are companies, for people who aren't familiar, how are startups generally evaluated? And then in terms of a product feature, how can you go about that? I think, an example is in the real estate market. I think an American company, is it Twilio or Zwillow? So they did this, and it became something really sticky. Once voyeurs or people who wanted to know the price of their house in Beverly Hills, they would be able to go on and see it. And I think Bahoshy have done something similar. So I think it's an amazing feature. But A, how is it done sort of in general with VCs, and how's it done? And then B, how can you go about doing it?
So I think this could be a whole 1 hour lecture, but let me summarize at least my experience. Number one, I'm not an investor. So it's really important to speak to an investor to get their mindset. Having had many conversations with investors, I think at the early stage, it's important to note venture capital is not charity. I remember the early stages, especially when at Astrolabs, there was a lot of frustration as to why aren't investors investing in my company. It's not a charity, they don't have to, it's their choice. And the trick is to understand the mindset of a VC. Their goal is for exponential returns. Otherwise, they'll invest in the stock market or banks or real estate and etc. In the Middle East, real estate is really an asset class of choice. So when you're looking at venture capital, you're looking for multiples on the investment that you're putting in. Now, then you need to backward engineer. What does that mean? To get multiples, you need mass scale, mass monetization, a very strong team that can implement. An idea is really only as good as the implementation of that team. And a product that is actually a solution of a problem, not a product for the sake of creating something you think people like. That's the kind of 4 elements that for any person that's trying to start up is to really understand it's not about doing a lifestyle business. It's not for the venture capital space. Again, of course, it's great to do those businesses. But in the VC space, when you look at the likes of Kareem and Souk, which are the 2 standout stories for now, although you're hearing bigger investment rounds than they had, ultimately, their goal was to get into as many countries as possible, into as many people's handsets as possible, with as many transactions that are happening and being monetized on a sticky and regular basis. If you achieve that, then you can achieve the valuations of growth. If it's a sustainable, profitable, growing business, that's not venture capital, that's a different type of business. And I think that's something that has really changed. The real phenomena that you're beginning to see now is, 1, VCs and the investment community is becoming more and more educated on what it takes. 2, you're seeing more exits, which means realized returns, not theoretical returns for the VCs. And the third is many of these startups have created founders who are now starting companies that have worked for these companies. So that Kareem Mafia, the PayPal Mafia, the management teams and the employees that have got their stock options and got those realized returns are now creating those type of companies. And they're solving for problems that they can actually find as solutions with technology.
Amazing. I think you described the kind of lots. I think you mentioned off air that you came here in 2007. You've described how the region has evolved in terms of, the original kind of risky people with VC, and now that they have realized some of those exits or created liquidity, then the next kind of wave is coming. Is that how you describe it, or when we're talking about Magnitt, founded in which year?
2016.
16. So what's it been like as well? Like you mentioned e-commerce as well. What are the other trends that have really kind of taken off in the last 5 years?
So the way I look at it is in any emerging market, investors are still trying to work out what is best to invest in. And when there are proven models that exist elsewhere, which is no criticism. I don't like the idea that people criticize copycats, because what happens is that you localize it to the market that you're in. But in reality, infrastructure, given everything that I said, which is huge opportunity, specific pain point, monetizable, getting into people's hands or usage, tends to be the first industry of choice because it's been replicated from other markets and then applied. So the ones that saw the first growth, e-commerce, which in my opinion is an infrastructure play, because ultimately what is successful in e-commerce, while it's the choice that they're providing, but it's getting it to your home. There were many companies that provided you choice, but you needed to pick it up from a PO box or from the mail. They're not successful. The ones that got it to your house were the ones that succeeded. Then it was people, Kareem, all of the transports, truckers, the food, Insta shops, etc. All of those were the first wave. As you start seeing the success of those, investors then move to other infrastructure pain points. Fintech, when people get excited about fintech, and we know the numbers, let's be clear, they're not AI, blockchain, crypto solutions in the region, albeit that there are some. They're payment infrastructure solutions. Okay. Money from here, money to here. People transferring remittance payments. Those type of solutions are the ones that are seeing the most investment. Uniphonic, that received 150 million yesterday, SoftBank, that is people communication, X to Y communication platforms, SMS, messaging, and the likes. So those infrastructure solutions in an environment where the Middle East, while it's continuing to develop, is 18 geographies, broken down, different demographics, huge bureaucracy, are the solutions that are getting the investment. COVID did provide opportunities for healthcare, education. You saw some of those increased in demand where there was a need for digitalization of those solutions, albeit they haven't been proven success stories for investors to double down in. But those industries are becoming more and more interesting as investors see returns on their investment. Their risk appetite to go into sustainability, ESG, agri-farming, into other more creative solutions will be the next wave that will come. But to date, they've historically been infrastructure plays.
Fascinating. Philip, we're sitting in Dubai, and a lot of these stories have come from here. I'll ask one sort of, maybe a gossipy question. Why do you think, and it's to do with competition, but why do you think we hear of Angami as a Abu Dhabi-based company or Swivel as a Dubai-based company? And, what's happening there?
So I'll leave you to ask the founders the question.
Okay.
But I think what's clear is that, interestingly, let's do a little bit of history. So originally, the growth of entrepreneurship in the region was out of Jordan and Lebanon, because from a tech talent perspective, very strong university base, very strong interest from a government perspective. Many of the founders were creating those companies at lower cost than you would in potentially the UAE or other GCC countries. And so historically, we're talking about the 2000s, many of the Fadi Ghandour, Aramex, Souk, Maktoub were Jordanian, Syrian, Lebanese type founders. In 2013-14, I believe, there was a celebration of entrepreneurship, which was spearheaded by IMF, World Bank support to try and drive entrepreneurship in the Middle East to diversify economies. And the UAE embraced the concept of digitalization of their economy and tried to push in the development of infrastructure, setting up the ability of companies to receive funding, encouraging the growth of what the UAE, as an example, is a perfect hub for networking in the region. Interesting to also note, many of the founders in the UAE, we did a study a couple of years ago, are expats who worked in consulting and finance. Magnitt, McKinsey consultants, the likes that have come from those type of industries.
And you are one of them as well.
I'm one of them as well, who set up tech solutions for problems they had identified in their professional careers that they looked to try and solve for. And given many of them were located in the UAE for their professional careers, it was a perfect starting place. And at Astrolabs, you would have seen many people that came from those type of professions that saw incubators, co-working spaces, and hubs that allow them the first port of call to set up. A huge amount of work has been done, and it continues to be done to try and make the ease of setting up within the UAE easier, but it's also now taking place across the region. The three big hubs from an investment perspective currently are UAE, even within Dubai and Abu Dhabi, both creating their own tech hubs, and the other Emirates. Saudi Arabia, given the opening and the initiatives that have been done with MBS and Vision 2030, is really looking to accelerate the technology. And Egypt. Now, interestingly, across all three of them, they have different strengths. The size of the market in Egypt and the low cost of people allows for huge opportunities for companies to scale into. Saudi Arabia, huge government initiatives, big population. The UAE is uniquely positioned as a connector across the whole of the region, as well as having original startup founders. There's a hub that's been created, a strong transport link across the region to the East, West, Africa, and the likes. So each of them in their own right have positive strengths. To your point, again, I leave you to speak to the founders, but ultimately what you realize is that you can have multiple jurisdictions. One thing that I'm very opinionated about, to be a successful company like Kareem, Rami, Swivel, you have to operate in all of these geographies. Where your headquarter is a matter of decision of the founder and whatever incentives are in place for them. But ultimately, it's not like they stopped operating in Lebanon or Egypt. They're still operating in all of these jurisdictions. And to be successful, not only should you have a mindset of being operational at a regional level, you should look to go into emerging markets, if not globally, to be successful. So ultimately, now it's just some of the headlines that are happening, but to be operational, you should be looking at all of them. And interestingly, just to add to that, I was on the STEP conference yesterday with Pakistan. Through Magnitt, we've now started reporting on Turkey, Pakistan, soon to include Africa, it's fascinating to see the interest of Saudi and UAE-based startups looking to operate in Pakistan, and Pakistani startups considering investment from these countries, if not looking to operationalize and move into those countries as well. Once you break down those silos, really the opportunity to become a sizable and scalable startup becomes a lot more interesting.
Wow, amazing summary. Again, thank you. If this is a teaser of what's available on Magnitt, then I think people will be interested. No, but Philip, what you said there as well kind of matches up and is consistent with your comment earlier around why VCs might be interested in an emerging market. But what I'm getting is a bit of a trend in terms of some founders in Dubai might say, hey, well, I'm choosing Dubai to go global, but actually the kind of narrative, the success stories is that the solutions are for this region. It's for, whatever we call it, whatever acronym we call it, it's the sort of Arabic speaking 20-something countries, this region. And that's what we've seen, right? So it's consistent with, but the question really is the return there for this region? Are they seeing those sort of multiples by focusing on, are you able to go with your deck and go, I'm just going to focus on the Middle East, MENAT, or those kind of neighboring countries? And is that attractive enough for regional investors and for international investors?
Again, I think it's for an investor to be able to speak to the actual multiples. But I think that what you have seen when you look at the Souk and Kareems is historically, because now you're seeing new instruments, the SPACs, the IPOs, the likes, and etc. Historically, what these guys have been able to do is really capture a market that has been acquired, because an Amazon and an Uber have decided, you know what, they've done all the hard work for us, let's go in and acquire them. And there are many other examples of that. I mean, Aventus is an example. You saw Harmonica, which was acquired by Match.com. Many examples, InstaShop. And so that has been the trend. Now, to speak on the actual multiples, I assume that they were interesting, especially for early stage investors that took the bets at the angel, seed, series A stage. I can't speak to the later rounds, but one would have to assume as these companies continue to grow by geography and grow by product and consumer base, they must be interesting for investors. Otherwise, they wouldn't be investing. One trend we are seeing specifically is more international investors investing in the region than ever before. Sequoia Capital, big name, made their first investment in fintech in this space. You've had NEA, you've had Tiger, Naspers, first round capital. I mean, there's many international players, as well as the accelerator programs that are setting up. 500 startups have just announced that they're moving. Number one, they rebranded to 500 Global, but they're also setting up headquarters in Riyadh with an interest for the region. That international interest in the region shows that there's appetite. And let's be clear, the arbitrage opportunity is also relatively high. While we talk about the valuations in the region really increasing over the last 12 to 18 months, they're a lot more suppressed than they are in the US and China and Southeast Asia. So for those investors, the bang for buck potential exit is higher than it would be in a much more competitive US or European market. But there, the technology and the development of those products are completely different. So you're playing in different playing fields. But again, the ecosystem is still relatively nascent. I mean, those ecosystems were not developed in 10 years. They were many, many generations of growth. And I think we're now entering the second generation or into the second 10-year growth of the ecosystem. And the success stories coming out of the UAE, Saudi Arabia, Egypt, and the wider ecosystem are really speaking to that.
Interesting. So investors who look at this region either here or from abroad are not only looking at the product, they're also kind of looking at the dynamics of the emerging market. Yep. And to put an example on something you mentioned, the Ngami listing was valued at 200 and something million, yet Spotify is a $60 billion company.
Yep.
So there's gaps there, which is very interesting.
Uber's acquisition of Kareem, it was valued at $2-3 billion, but they go and list on the stock market many multiples of that as well. Amazon, the same thing, 680 million or 580, depending on which number you want to take, and yet Amazon is Amazon. So yes, there is still a discount for the region, but for the founders that are setting up those companies, they're great exits, they're great stories, they're great returns. especially for the original founders.
And so what is this region as an emerging market compared with others? But also, tagging on a separate question, what's driving the numbers you mentioned earlier? Are we part of the kind of global liquidity, or is it something that's unique to here, that there is a wave of momentum and energy for startups?
I think it's twofold. So it was interesting when we look at the data that we produced for the emerging markets of the last 18 months. We know that it takes about 9 to 12 months to raise an investment round, because it's a lot of conversations. It doesn't happen overnight. Last year, Q3, Q4 were the lowest quarters of venture capital investment in 4 or 5 years. So
in this region?
In this region that we tracked. So namely, when COVID hits in March, the actual impact came later in the year because it's got that lag. 2021 happens, and clearly the investor appetite returns. Valuations may have been a little bit dampened. Startups are growing. As I said, last year, basically many companies would have focused on survival, created new products, continued traction, come to raise funds. Then you talk about the global phenomena. Globally, it was a record year of investment already to date. So it's not just a MENA region, it's a global phenomenon. But here in the region, many of the LPs that invested in the fund of funds and in different VCs have liquidity. Stock markets at record highs, so people are wanting to diversify. Angel investors have spent many months sitting at home and disposable income is higher. So across the board, I think it's a financial benefit. It's a reserve of cash that people didn't want to invest in a crisis last year that they're now looking to deploy. Governments continuing to stimulate and drive that behavior, but it's also a global phenomenon. So the more international people that are also coming into the space is also driving that growth. I mean, these 150 million investments that you've heard for both Kitopi and Uniphonic are SoftBank. They're not regional investors, they're international investments that are coming into that space. And so there's that also, that's the more regional effect, the international interest, and more family offices looking to invest in this space given the exits that they're hearing.
Exactly. Oh, so that's a really interesting way of putting it, that, you know, those results and those success stories are going beyond the startup space. They're bringing in, and we've seen some of the semi-state companies listing parts of their businesses in KSA and here. So it's actually, you know, what you're reporting on is, although focused, is also part of the wider sort of business landscape and environment for that. And to that point, what's missing? You know, we've seen exits, we've seen US listings. When are we going to get startups on the Tadawul or the Dubai financial markets or Abu Dhabi?
Look, I think that's a great question. I mean, I don't have a particularly strong view on that because I don't know what it takes, the requirements. I mean, I think that listings is challenging because the traditional listing of a company is a profitable company, track record, financial stability, huge amount of work and cost needs to be done into the auditing and the legal around that. And traditionally they've been SME or offline businesses that are large. Tech companies that are venture capital hyper growth don't tend to be profitable. They tend to have loose management team and growth and etc. And so that's one barrier. The second barrier is which listing do you go to? And I think there needs to be a certain effort of even consolidation across these listings so that there is one listing of choice. Do you go to Saudi? Do you go to UAE? Within the UAE, is it Dubai or Abu Dhabi? Almost a consolidation and a pick of one to double down into for Egypt, tech specifically, even Egypt. And so I think there is a lot of effort. I know personally, I'm on the Dubai Future Council and the Dubai Digital Council here, and there's discussion of this, but it requires some reform and change, as well as investor appetite for a company to list. So the SPAC options, which is a new trend, is one that people are backing off and provides them a new opportunity for liquidity. Second one is just secondaries. A lot of founders and employees want liquidity as well as early stage investors. So is there a mechanism that can allow for liquidity of those investors that doesn't require a full listing, but to have a bit more liquidity in the space to show returns to investors and the founders and the teams to get more buy-in into that space? So it's definitely a challenge that needs to try and be resolved for.
So if you were to describe what's needed in part of the ecosystem. There's some of the challenges that need to be
Correct.
fixed.
I don't think it's number one. I mean, we were discussing it yesterday at the Dubai Council meeting. I think that talent remains the number one challenge for startups. Number one, you need to have people with a mindset. It's not a corporate job. It's not a 9-to-5 job. I'm sure you can speak to this. Like, you definitely need a certain mindset. And the more people that are coming out of other successful startups, you're seeing the growth of that talent. The second is it's difficult to acquire talent in the region. I mean, visa, insurance, restrictions on real estate, and etc. It needs to, more than anything else. We were discussing how probation periods and potentially letting go of people needs more flexibility. Otherwise, you're always trying to find the perfect hire from that perspective. Also, when you speak to the likes of much larger organizations than me, they want to attract the best talent from abroad. Germany, London, US. Their salaries are one problem, but next is cost of living, education, residency, citizenship, the ability for them to have a place to call home long term. So the talent problem, which is the key driver, a company is only as good as the talent that you can acquire, is the one that needs potentially the most focus. Then it's bureaucracy, which we kind of discussed, and regulation, to the extent whereby any given market is relatively small. If you are able to operate across the whole of the GCC, MENA, Africa, using a single license without having to set up within each of the jurisdictions, that scalability play becomes a lot more interesting. But again, that goes well above my pay level to be able to try and solve for. But again, the funding and the exit potential is the goal or the light at the end of the tunnel.
It's really interesting to listen to you, Philip, because you come at it with a lens of the startup space. Some people might say on the talent, yes, there might be challenges with talent, but there's a lot of people looking for jobs. Therefore, you know, so it's really different perspective. It's good to listen to. Coming to the end of the time, what's next for Magnitt?
So for us, like I said, doubling down on the data piece. I think that really for us to be able to educate stakeholders to make informed decisions is core, and we're very client-centric around that. There's basically two paths that we'll continue to take. The effective launch of Africa, which will be happening in the next couple of weeks, into new geographies, and we've already identified Eastern Europe, Southeast Asia, potentially LATAM as the next geographies. So from a benchmarking perspective, in summary, it's useful having the international platforms, but if they're not covering this, you're not comparing apples to apples, you're comparing orange to apples. The second is the depth of the data. We still are relatively high level in the information that we're gathering. We discussed valuations. We want to talk about people, understanding what the people impact is on the different startups. We're going to be covering venture debt, the LPs, who are the LPs in the funds. So it's going to be the depth of the data and the product, which effectively is what we're trying to build as Magnitt, the SaaS product, to enable people to manipulate the data in the way they see fit. Currently, we're telling them what we think that they want to know. We want to enable them to manipulate the data in the way that they need it.
Amazing. And will you raise, did you raise some funds originally?
We raised funds originally. We are in the process of discussing different options. Wouldn't be surprised to accelerate the growth that there will be a cash injection.
Amazing. And how do you position the company? You know, is it a data company, a media company?
Yeah. No, we're a data platform. So we are effectively a venture capital data platform for emerging markets.
Amazing. Well, thank you so much for your time today.
Thank you very much for having me.
Really fascinating, and we could listen to you a lot more, so it'd be good to have you on again sometime.
It'll be my pleasure.
Thank you. Hey guys, I'm Richard Fitzgerald. This is Dubai Works, where we interview the business leaders making a difference in this great city.
That business with scalability was very interesting to me.
I like building something that has legacy.